Hi, it's Market Day Report. I'm Tony. Glad to see you. Thanks for allowing us to be a part of your Thursday. Already this morning, we get a USDA report. Weekly export sales. We'll have more on that. We also got yesterday our broiler hatchery report. We'll also have a little more on that throughout the morning. First off, we start with the corn market. Corn finished the session higher the past 2 days. However, July starts the morning, and we've been trading, an hour and 15 minutes? 438.5, it's one tick lower. December, 446.25, it's 2.5 higher. Okay, from corn to soybeans. Soybeans have also been higher for 2 consecutive sessions. November, 1030, that's a nickel higher. And to the wheat market. And we'll start with Chicago, as Chicago trading 4.5 higher on the July, 547.75. Hard red is up 3.75 at 544.25. Spring wheat D's a half penny lower, 652.75. Cotton is trading 26 higher at 68.03. Let's go to Chicago. Vice President and Zaner Ag Hedge, Ted Seifried. Okay, Ted, we've kind of seen a little bit of a reversal from our opening trend. What's moving the markets higher?
Yeah, well, first of all, Tony, we did have export sales, and they were okay. They were all within the range of guesses, so nothing really. I'm going to say it's not overly positive, but it's certainly not negative. I mean, there's some pretty decent numbers, especially for corn, so that's good to see. But China reporting that their Chinese President Xi had a phone call with President Trump is adding a lot of optimism to the market that maybe there was some progress made. Now, we haven't heard any details about that. There hasn't been any announcements that, oh, this has been resolved and we're now going to have, X or tariffs, 10 to 10% or something like that. But there is that optimism that you can see kind of happening, not just in the grains, but really kind of across the board. So I think those two things. Plus, we do have some concerns about weather. This is the time of year, Tony, that we kind of find something wrong with weather, whether too wet, like the big system that we just had move through Tuesday into Wednesday, or the 2-week forecast looking a little bit warmer and drier than where it was to start the week. We can kind of spin those a little bit positive. It's that time of year where we're nervous. We're nervous about weather. So that's why we usually get the seasonality higher right now. I think you're seeing kind of hints of that, but it's happening because we don't have any real negative outside market news. Again, we're looking at the phone call between President Xi and President Trump as being a positive thing. So we have this kind of drift higher. Now, I'm a little skeptical of it. One of those reasons is if you look at that July-December corn spread, it continues to really break down into a carry that isn't very bullish longer term. While December corn has really had some good upside movement here over the last couple days, that July has been extremely reluctant. And again, when you have that bear spreading, especially old crop versus new crop, it's kind of saying there's not a long-term bullishness feeling happening for the corn market as a whole. So you say, flat price, let's not get too excited, at least not just yet. It's also suggesting that there's maybe more corn out there than what the USDA is saying. Maybe last year's production might be a little bit higher. Either way, that spread has not been giving us really warm and fuzzy feelings there. Because again, I mean, you look at yesterday, that July corn closed basically unchanged while December was up 5 cents, and you've got more of that happening here today. So thanks for putting that graphic up. I like that.
Well, I thought you
we'll
would.
see
That
where we
worked
end the day.
perfect into what you were saying. Perfectly.
Good stuff. Good job, control room.
Okay, now before we go, I noticed that soybeans moving higher as well. And I'm just going to throw this out before the break. I wonder if it has anything to do with National Veggie Burger Day. I'm just going to throw that one out because we're coming back and we're talking beef with Ted Seifried. Market Day Report continues in a moment. Cash cattle, Kansas, Texas, how about $228? That's $5 higher than last week. And now we look over at live cattle futures, and look at that. We've hit 221 this morning. 220.77 last check, up 237. 215 on that August contract from live cattle to feeder cattle. And feeders saying, hang on, 307.02 on that August, up 315. We're seeing a 306 in September. And all of the contracts now for 2025 through November are trading above 300. Is that a new normal, or at least a new kind of normal? 104.65 on July hogs, 107.17, both of them trading 37 to 40 cents lower. Ted Seifried with Zaner Ag Hedge. All right, thoughts here.
I mean, wow. June live cattle just gaps higher, and we are into new highs by a fair amount. Like you said, cash trading $5 higher is definitely a catalyst to that. Doesn't feel like the Packers are getting let off the hook anytime soon. I mean, they're needing to bring cattle in, even though profit margins are under quite a bit of pressure. Now, yesterday we were under pressure early because we're worried that, we've heard rumors that one of the major facilities might either slow down or shut down because of these Packers margins being deeply in the red. But there hasn't been any confirmation of that, at least not yet that I've seen. And here we are moving higher on that higher cash trade. And like I said, new highs by a fair amount there for the June live cattle. Now, August feeder cattle got within a tick of those highs that we had from earlier last month, and then sort of pulled back. But I mean, it's looking pretty good. I gotta say, the momentum seems to be pretty strong. Looks like we have more upside potential. I will say that gap that we left when we gapped higher in that June live cattle will get filled at some point. Probably doesn't feel like it's going to be today. I will also say though that we've had a lot of volatility in the cattle complex. Volatility sometimes means that we're getting towards an extreme in a market. So I do think we still have to be sort of on high alert, because there can be anything coming from bigger picture macroeconomic things that make us worry about domestic demand. We're not worried about that right now, Tony. Everything looks good in the stock market for the most part. And people are buying, people are paying the higher prices, but there can be things that make us scared about that again. So we'll be watching the news. And I do think you have some nervous bull markets here, but at least for right now and for today, I mean, look, we've got new highs by a fair amount in those June cattle. I think feeders could, by the end of the day, maybe mark a new high as well. And this would certainly be a new high close if we close up here for those feeder cattle. So looking good, I guess, is the best way of saying that.